Hey everyone, um, making a video today on QQQY. It's a new fund, very popular. Word of mouth is getting out. CNBC's even talking about it. So I figured I'd do my own research and then share, what I gathered for you guys to hopefully, make your own financial decision and go from there. Which reminds me, as always, I'm not a financial advisor. This video is for fun and entertainment and all that jazz, right? So anyway, I'm at the QQQY website, and this is run by Defiance ETFs. So remember that name. It's going to be probably another big name like YieldMax. Now, who are they? Why do we care? What are they doing? So long story short, they're selling options on QQQ. QQQ is tech heavy ETF. So it's pretty volatile. So selling options on it could be, bring some very good income in. So here's the website. They launched last week on September 14th. So no distribution yield to show, no 30-day yield to show, but they do distribute monthly. So that is a good thing, at least in my eyes. You can put your email in, as you can see, to get updates. Great. I did that. No updates. But I'm not going to go through what's in the website because I'm going to go through the prospectus in a moment. But in summary, what do? They sell puts, right? Daily. They sell puts daily. Insane. QQQ allows you to sell options on a daily basis. Not every fund or stock allows that. It all depends how, the volatility, because if there's no interest in it, they're not going to allow it, right? The market won't allow it. So since the market allows you to sell daily options, that's what they're going to do. I mean, that's a lot of time. I mean, it's like a full-time job, obviously. So it could work out in their favor, which means we're going to get paid, and it can go against us. And we'll get into that as well. So scroll down. Net assets right now, 4.96 million. As I mentioned, pretty new fund, so this is a small number. Current price is around $19.92. Yep, launch date 9/14, blah, blah, blah. Follows the NASDAQ. Expense ratio, 0.99%. That's good, considering YieldMax is 0.99%, and they sell weekly. I know they're very active, and it's, they almost do daily transaction, it seems like. So, but this one really is daily. So it could be multiple transactions daily for 0.99%. So if they're good at what they do, this to me is worth it. Here's the chart so far. Again, too new to really judge, but they dropped from their open, it looks like. Here we go. This part, very, very confusing. Their top three holdings are cash, XND, and NDXP. Sorry, I'm just sipping coffee as I go. I'm trying to get this video in before work. So where's the puts on QQQ? No idea. They're not doing many shares here, but still, like, what is XND? What is NDXP? I can't even find NDXP. And when I search XND, this is what I found. Xander Resources, Inc. What the hell is that? This is so confusing, because even when I click view top download holdings just to see, maybe it's just a typo. No, it's like, there it is. Like, what the hell's going on? Anyway, I'm assuming that'll get addressed. I'm not going to go, I'm going to move on from that, and hopefully by the end of this week, we'll see some QQQ puts there. If you guys know what the hell this is, please leave a comment. Let me know. I have no idea, and I'm not buying into this until these holdings are cleared up. So I wanted to get into the perspectives, but let's just see what else this website has to offer. So they'll show the distributions. Great. 12-month trailing yield. Great. And then some articles. Okay. Awesome. All right. Prospectus. So this obviously is everything you need to know about the fund. This is 84 pages A lot of people do not have time for it, which is why I'm making this video. Last night I went through it. I highlighted the important things, and I'll pull that up for you right now. So, and by the way, real quick, I will save this document in my Discord. So if you guys are interested, you can locate the file on my Discord. And for those of you that always ask me for my spreadsheets as well, please ask me on the Discord. That way I'll remember and I'll attach it. Because a lot of the files I already put on there, I can't save a file through a reply on a YouTube comment. So I can only do it through Discord. So, it's easier to do it that way. So if you guys have interest in this file or other files, please head over there. I have the link on several videos. I'll put the link on the bottom of this video as well. And then, you can join from there if you want. So Defiance ETFs has 3 funds, QQQY, JEPI, which oddly enough is not JEPI with an I, it's JEPI with a Y, and they're going to sell puts on S&P 500. IWMY is the third. They're going to sell puts on the Russell 2000. So all 3 of these funds, same idea. These 84 pages mainly goes through the same exact thing on all 3 funds. So what I'm going to do, I'm just going to go through one. I'll go through the first one, the QQQY, but you could pretty much expect the same exact idea for the other funds. So let's get to it. Table of contents, great. So as I said, I highlighted what I think is important, so I'm just going to go through that. I would highly recommend, you guys going through this file as well before you invest, because it has all the information you need. I'm just highlighting what I think is important, which may not be the same as what you think is important. All right, the fund's primary investment objective is to seek current income. Okay, great, we know that. Secondary objective is to seek exposure to the performance of the NASDAQ 100, subject to a limit on potential investment gains. So it looks like, it's going to have a similar process. They're probably going to do a synthetic share, which is a buy, call, sell, put. I don't see that in the holdings yet. So again, I don't know what they're doing. So I'm guessing they're going to do that in the QQQ. And then what they're going to do to seek current income is they're going to sell puts. So just like when you sell calls, when you sell puts, that will bring in you some income. But when you sell put, that's a bullish play. And when you sell puts daily, obviously it's higher risk. So I'm just going to go through a quick example that hopefully could help you guys. So if you have $100, if QQQ is $100 and you sell a put for $100, you want that stock price of QQQ to stay at 100 or move up above 100, because then you're not obligated to buy it. If you sell a put at 100 and for the day and it closes at 99, you're obligated to pay $100. So you're going to have, they don't plan on owning the shares, so they're going to have to cover the difference when that happens. So again, sell a put at this current stock ETF price for the day. You want it to go up or stay the same. If it goes down, you lose money. It's pretty simple. So again, it's a bullish play. If you're not bullish on QQQ, then obviously you don't want to get into this. So management fees, I think we covered this already, 0.99%. That's a pretty good deal for a fund doing daily options. This is an important note. Will not seek temporary defensive position. As I mentioned, if you sell a put at $100 and the ETF is priced at 100, if it goes down to 90, you lose that difference. Okay, keep that in mind. They're not doing any defensive positions to stop that. This is, a purely bullish play. The fund uses an at-the-money and in-the-money put selling strategy to provide income and exposure to the value of the index. So when we say at the money, again, if QQQ is $100, if they sell a put at 100, that's at the money. When they say in the money, if QQQ is $100, they would sell a put above $100, so 101, 102. Because if QQQ doesn't move and it stays at 100, we're obligated to pay the 102, so we have to cover the difference. But if we sell a put at 102 and QQQ is priced at 100, we're going to get more premium for that. So the only reason I would assume, do in the money is they're bullish for that day. Fund option contracts provide income from option premium and a limit to participation gains. Yep. So if it goes up above the put price, we're not going to take advantage of those capital gains. We will, obviously, if they price it in the money, 102 and it hits 102, we'll take full advantage of those capital gains. If it goes to 105, we're missing out on that $3 difference. Hopefully that makes sense. Every day the fund will sell put options that are priced at the money. Oh yeah, highlight this because they actually mentioned a percent, or up to 5% in the money. Again, this means, using the $100 example, they would do a strike price of up to 105. That's very risky, but the premium is going to be nice. Options expiration date, which is typically the next day. So I'm guessing they're going to either do same day expiration, which means you'd sell a put today that expires today, or following day. I don't know. We'll see. Here we go. Here's what we care about. Seek a minimum daily income of 0.25%, right? So, what does that mean? That means that they're going to try to earn you 0.25% per day. And I think, I think there's 251 business days in a year. So it came out to like over 60% yield annually. And that is nice. But that's, again, it's not always going to go your way. In my opinion, it's going to be a 40% yield. So that's what we can expect. All right, the fund's options contracts provide exposure to the changes in the index. Yes, we know that's the synthetic share part. Current income from options premium and in the money potential from, we know that. Limited potential gains. All right, here, look at this in purple. The fund's investment advisor is Toroso Investments, and the investment sub-advisor is Zega. Ready for this? If I go, where the hell is my file? This is Tesla Prospectus. Tesla Prospectus fund investment advisor is Toroso Investments, and their sub-advisor is Zega. So they have the same investment advisor and sub-advisor. So that should give you a comfort if you're a Yield Max owner. Anyway, I thought that was pretty interesting. Here's some other notes I highlighted. The fund strategy is subject to all potential losses if the index loses value. Again, keep that in mind. That's the big downside. QQQ tanks for a day, you're tanking for that day. QQQ goes up massively for the day, you only have, minimal gains for the day. Why do you invest in this? For the options premium, for the income. The fund does not invest directly in the index. Again, I just wanted to highlight that because they don't, they're not purchasing the shares. They're using synthetic shares. And they're also buying treasuries, which they're using as collateral. Okay, a couple other things. We'll sell puts. We kind of covered this. Sell puts with near expirations at a range of 0 to 5% in the money. This I thought was interesting because they talk about daily options, but they say it will range from 1 day to a week. So they might sell weekly options. That's fine. Fine with me. Okay, U.S. Treasuries. Fund will hold short-term U.S. Treasuries as collateral. And it's going to generate income. I think the latest rate was like 5%. So that alone, they're getting 5% from treasuries. Awesome. I always love these tables. And this table looks exactly like Yield Max. Obviously, they use the same advisors. So Similar process. This just shows their holdings. They're selling put option contracts and they're holding treasuries. I know their current holdings don't show that. Again, problem, but we'll address that. We'll talk about that. So they sell at the money contracts, in the money contracts. That's it. And what does it say? The market value of the cash and treasuries held by the fund is expected to comprise of at least 80% of the fund's net assets. I guess the other 20% they may hold in cash. And that's it. The rest is definitions until it gets to another, another fund. See, as you can see here, they get into S&P 500 fund. So that's the prospectus. I just want to cover one thing so you guys can see a picture of what the selling puts looks like. So QQQ is currently priced at 369. I took this pre-market early this morning, so the numbers are not completely accurate. What is today? Today's September 20th, and if you sell a put at 370, which we'll just call that the current price, you'll see here, the last shows 165, right? So let me get my little pen here. So the last right here shows 165. If you sell, that was for the 370. If you sell up, they're going to pay you more premium. They're going to pay you $2.19 per share because you're hoping this goes to 371. If it does not, you have to cover the difference. So the more you go up, the higher risk you take. The higher risk you take, the more premium you get. Obviously, 372 is 280. If you did 366, obviously you're not going to get a lot of premium. So they're not going to do that. They're going to keep it at the money, as they said, or in the money. So they're pretty much going to stay below this line here. So that's the, this is from Thinkorswim. Love Thinkorswim, which, by the way, I was told Charles Schwab, when I moved there, they're going to keep Thinkorswim. So that's a huge help. Very happy about that. So yeah, that's QQQY in a nutshell. Let me know what you guys think. This was my third time attempting the video due to interruptions from my son, but it happens. That's life, right? So that's it. If you have any questions on the fund, leave a comment. If you have any questions in general, leave a comment or whatever. If you enjoyed the video, obviously, I think, clicking like and all that helps the algorithms, so they say. I don't know. But as I said, if you want the file, the prospectus file or any other files, they'll be located in the files channel of my Discord. Anyway, guys, time to go to work. And thank you for watching or listening. All right, later.